Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies, which just released their earnings report. In this video, we will be analyzing two articles, to where the first one is titled, Palantir Raises Revenue Target on AI Boost. Right now, Palantir Technologies is trading for close to $18 after their earnings report. However, analysts still believe the company could fall to around $5, while more positive analysts believe the company could surge up to $25. Clearly, the results of the earnings report have not set into the overall share price as of right now because it was done after hours. However, over the next 24 hours, this company will be extremely volatile in their overall share price. So let's go over their results, the future of this company, some very impressive revenue boost guidance, and why they are buying back shares, which is fantastic news for investors. Palantir Technologies, which is a big data and analytics company which serves both commercial enterprises as well as government clients, which also specializes in artificial intelligence, recently raised their overall annual revenue forecast, which is really good news for investors, on top of also saying that it would buy back shares up to a total of $1 billion. So clearly they are banking on growing demand for their overall artificial intelligence, which will boost their overall revenues, and the company is so confident that they want to buy back some of their shares. The CEO, Alex Karp, said that their AI platform has had users use their product over 100 organizations, which range from healthcare all the way to the automotive industry, while at the same time Palantir is still in talks with more than 300 additional companies to use their artificial intelligence platform. This platform will essentially operate as an AI assistant that can help enterprises make decisions that are data-driven, so it's going to enhance and optimize and make their operations more effective and efficient. Palantir's shares rose around 3.5% in trading after the bell when they released their earnings report, following a 10% dip after the company said it expected their full-year revenue above $2.21 billion, which would be in line with the overall estimates from professionals. An RBC Capital Markets analyst also chimed in by saying, given the heightened expectations of the stock from the retail investor base around Palantir being an AI beneficiary, these are kind of disappointing numbers, end quote. So he's essentially saying that a lot of people were going into this to see a huge revenue beat, but when their full-year expectations matched estimates by professionals, it seems that retail investors were let down. The shares have since recovered because of the good news regarding the buyback program, which is going to be significant for Palantir because they are such a large company. However, a D.A. Davidson and Company analyst recently chimed in by saying that Palantir is going to benefit from this buyback program. So not only does this benefit investors, but it's also going to do great work for the company themselves. But let's jump into their actual results. Palantir, for their second quarter, concerning their revenue, brought in $533.3 million, which means that their revenue rose by around 13%, which was above estimates of $532.7 million, while their adjusted profit per share was in line with expectations, which we will talk more about in our next article. Meanwhile, the chief financial officer said that their demand over in Europe was muted, which negatively impacted not only their commercial revenue, but also their overall revenue. And in the next article, don't worry, we're going to go into their commercial segment as well as their government segment, because these are their main revenue streams. So in regards to their overall revenue, their revenues did beat estimates, but barely, and it seemed that retail investors were underwhelmed because they were anticipating a far greater beat in their overall revenues. And since their overall full-year estimates were in line with current projections by professionals, it seems that investors, even though they did have a revenue beat, were still ultimately let down in regards of their revenue. But now let's talk about their earnings per share. On an adjusted basis, Palantir Technologies earned 5 cents a share in the June quarter, which again was in line with expectations, while their adjusted income from operations surged to around $135 million, crushing the estimated range of between $118 and $122 million, which management forecasted. And honestly, that adjusted income from operations, that is a huge beat, and I think think that a lot of people are overlooking this fantastic result. But remember, this is on an adjusted basis. What about the thing that really counts in my opinion, which would be the GAAP basis, or their generally accepted accounting principles basis? Well, in regards to that, which I think are the numbers that truly count, the company earned $28 million, or around a penny per share, which means that Palantir completed their third consecutive quarter of GAAP profitability, which again is another phenomenal milestone to pass. And we'll talk about a little later that if they achieve their fourth consecutive quarter of GAAP profitability, something amazing is going to happen. But we're going to talk about that more at the end of the video. In the meantime, Palantir said their commercial revenue was close to $232 million, which increased by around 10%, including a 20% growth in the overall US commercial business, which gave them $103 million, while their government revenue was $302 million in total, increasing by around 15%. And we also got good projections for the next quarter. So for the September quarter, Palantir is projecting revenue of between $553 million and $557 million, while the consensus expectation was for $553 million originally. For adjusted income from operations, they're anticipated to bring in $135 million to $139 million compared to Wall Street's call of $131 million. On top of that, the company expects to maintain their profitability on a GAAP basis throughout the entire year. And guess what? If they do that and Palantir achieves another quarter of GAAP profitability, the company will become eligible for inclusion in the S&P 500 index, which would be phenomenal. Both the CEO of Palantir Technologies, Alex Karp, and the CFO, which is their chief financial officer, both told Barron's that if they achieve GAAP profitability for another quarter consecutively, then they are eligible for inclusion in the S&P 500. And the reason this is fantastic news is a lot of ETFs and funds track the S&P 500. So if Palantir is added to the S&P 500, when you buy ETFs and index funds which track the S&P 500, Palantir is going to receive some of those investments. So although people are not directly buying Palantir in this regard, still this money, some of it will flow into Palantir Technologies, increasing their overall share price. Lastly, the company said that they had $3.1 billion worth of cash on their balance sheet, which is great news because they can use this to make even more products and services on top of making very strategic financial investments. Therefore, there is a massive opportunity for this company going forward, and as usual, they have no debt, which is very uncommon for a technology company. The CEO has predicted that Palantir will become, quote, the most important enterprise company in the world, and this he believes is going to be driven by artificial intelligence. He even said that the world is moving to a place where algorithms and enterprise software are the difference between underperforming and outperforming businesses. He goes on to say that some lackluster players are not even going to make it over the long term, and Palantir is either going to boot them out of the market or completely overtake them. As of right now, Palantir shares have rallied a total of 175% so far this year. So for the past 2 years, we've been reporting on this company. I've told you that this is going to happen, and finally, we are receiving the fruits of our overall labor. A 175% surge is absolutely insane, but again, always remember to practice proper risk management. I myself do not allocate more than a 5% initial portfolio allocation to any singular risky growth company, including Palantir Technologies, and when some of these companies surge in their overall share prices, I take profits at the top, I wait for them to pull back, and I reinvest at the bottom. This is what I do. I rinse, wash, and repeat the strategy for essentially all of my single growth stocks, and Palantir is no exception, but I would love to hear your thoughts down below about this earnings report, what you think the company is going to achieve over the next year, how high you think their share price is going to go over the next 12 months, if you're excited about their share buyback program, if you think they're going to enter into the S&P 500, which I believe they are, and just give me your general thoughts. But with that being said, don't forget to go and annihilate that like button right now for more videos just like this one. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents to support me personally, because that's what keeps me here on YouTube. And with that being said, I will see you in the next YT video.